And hello, everybody. It is December the 9th, Thursday. Welcome to another real estate update along with Jaden Bax from Avenue Financial. Jaden, what's the snow situation up in Crossfield today? Is it,
You know
you got a
what?
lot of
It's
snow
like
up
a
there?
no, there's a beautiful day, very little snow, just enough for my son to go sledding. So it's a perfect day today.
That's awesome. That is awesome. Well, we have a lot to get to today, more on the real estate side of things with our November stats that have come in. And so we're going to get to our weekly stats first, and then we're going to do a fairly deep dive into November and also look at the pricing this year. So where were we a year ago, pretty much in terms of pricing, and where are we at now? I posted this on Instagram yesterday, and it is pretty crazy. So without any further ado, I've got all these different slides on my computer, and let's share my screen. All right, so weekly stats. I teased in today's video that inventory levels, I've been a realtor coming up on 6 years. I've never seen them this low ever. This is just absolute craziness. So welcome if you're joining us live, if you're watching later on Facebook or YouTube, thank you for tuning in. So let's check it out. So December 2nd to 9th, and we had 148 new listings compared to 130 the week before. Of course, I was away last week somewhere warm, so we didn't do an update last week. So we did have an increase in listings, slight decrease in sales from 300 down from 328 the week before, but our sold plus pending is still at 423 for a net difference of plus 275. And I apologize, that net difference in the previous week, that is not complete because we had 407 sold plus pending on 130 new listings. So just the difference is just so high right now. It just is so much on the seller's market side of things. Only 71 price reductions this week. If you look back to, I believe that is the first week in November, we had 150 price reductions, only 71 this week, less than half of the price reductions we had 5 weeks ago. Look at the detached listings here, 1171. Look at the detached listings 5 weeks ago, 2,090. I mean, it's hard to fathom until you actually see the numbers. You've probably seen it on the news, on things like that, but these are the actual numbers, and it is real. And I'm going to give you some examples of that here in a few minutes as well from some of my listings over the last 2 weeks. Total detached listings. No, that's not, or sorry, total listings. I was going to say that's not detached. That's total listings of 3,372. Look at 5 weeks ago. I'm going to pull this a little further so I can mouse this over for you. 5 weeks ago, 5,030 total listings. We're almost, well, let's call it 2,000 by the time this week is done. That'll probably be pretty accurate, down from 5 weeks ago. Now, this is normal for this time of year for listings to do this. What isn't normal is for sales to stay way up there where they have been. I mean, if you look at our detached sales over the last 5 weeks, they've really been in that 300 to 325 range and have not wavered at all. So that is that's a lot to grasp, and that is just this week's stats. And now we're going to stop that. We're going to share another screen here, and we're going to take a look at our November 2021 review. So this is all the headlines. We had a seller's market. It's continuing to drive up prices. It's pure supply and demand. That's what's going on. Sales to new listings ratio. So this is something we use in the business to kind of gauge, one of the gauges that we use to see how the market's doing. So for every one listing that went on the market, there was 1.18 sales to kind of break it down. Right? So there's now some people say, well, how does that work? Well, there's also listings that were on the market prior to that listing hitting the market, if you know what I mean. But it's really hard to wrap your head around, but it's that busy out there right now. I feel like we're back in spring and the numbers bear that out. Another record of 2,436 detached sales. Detached benchmark price rose 11% to 542.6. I'm going to show you the stat from January 2021, and you may believe your eyes, you may not believe your eyes. We're going to see the whole year in one screenshot here. Semi-detached prices up 9%. Semi-detached is doing fantastic. So just a few weeks ago, I listed a semi-detached, beautiful townhouse in Cochrane, built a few years ago, sold on the first day on the market for well above asking price. Row townhouse prices, same thing. I had a listing where the clients actually are investors, and they're divesting themselves of some of those investment properties. And we had this property on the market when it was tenant occupied, and quite honestly, did not look great inside. It was hard to book a showing. We relisted it once they put in new carpet and new paint. Really a small investment in the whole grand scheme of things. And we sold it first day on the market. First day on the market for a row townhouse in the northeast part of Calgary. Apartment prices are even up 2%. Like it's that was in November. So it's just really quite hard to get your head around what is going on. But Jayden can speak to interest rates and how much that has really pushed people. And my guess, Jayden, and maybe you want to chime in here, the rates are climbing. And my sense is people are seeing that going, well, I want to get in now, right?
Yeah, I think so. There's a little bit of that. I think if you're making this huge life decision based on interest rates, it really, a difference of 0.05% on your
Right.
5-year fix isn't going to make much of a difference. We're kind of feeling like the fixed market, the underlying bond market has settled down a little bit, so it's not going to keep going up and up and up. But who knows what's going to happen in 2022? But I totally agree with you. But what we're running into from a broker side is people, well, my friend got his mortgage for 154. Why is mine 254? And I said, well, your friend bought 6 months ago at the exact right time, right?
Yeah, exactly. All right, so that is November. Now I want to throw up one more slide before we get to Jayden's interest rates, and that is the year at a glance. Here is what we're really going to see. So I'm going to throw that up. So my apologies for the vertical of this, but I did want to throw it on the screen. As I mentioned, I shared this on my Instagram yesterday in my stories. Take a look at January. So let's look, this is home. So that would be detached. 492 was the benchmark price back in January. Fast forward to November, 11 months later, and we are at 542.6. That is in the space of 1 year. All right, so let's slide over to townhomes.
That's crazy.
I know, right? So even townhomes, 391.7 in November, 429.8. And there's not semi-detached on there, but I would say that semi-detached is slides in between townhomes and detached homes in terms of price increase. And then we look at apartment condos. So this has easily been the most challenged part of the segment, or the most challenging segment of our market. So they started the year at 245.2. Hey, look, 252.2 in October, 251.7 in November. We had highs of 253, 254. So they've done well because they're whether it's investors from out of province that are picking up apartment condos for investment purposes, first-time buyers that can now get in with the great programs that Jayden can tell you all about. But I mean, the increases, it was pretty crazy to actually see this on one page yesterday. So wanted to share that with you, and very, very interesting year that we have had here. So that was 9 minutes of me, Jayden. So let's get you talking here about some interest rates.
Honestly, very, very little to talk about this week. Slight increases across the board on the fixed side. Variable is holding steady at extremely low, 1.15 on a 5-year variable. Everybody's seen the news. Variable, like prime, is going up next year. We know it. We were kind of hoping for the second half of the year, but we know it's going up next year and very likely in 2023 as well. So what? If you're starting out at 1.15%, that spread up to 2.49 is phenomenal. You need 6 interest rate hikes to get to there. And we've talked about this before. In the meantime, make the same payment as if you got that 2.49, and you won't have any payment shock, and you're going to pay your mortgage down faster. So the play to me right now is obviously variable. No matter what happens with prime and the underlying numbers there, the spread is just so, and really what we look at when we look at how good the variable is the discount on variable. 1.3% off of prime, right?
Yeah.
Like that to me in that high ratio, which is the less than 20% down section, is just phenomenal. Even if variable goes up, 1%, if it goes up 1.5%, you're still in a great interest rate. And if you've been playing it smart, you've paid down your mortgage significantly before variable goes up that much.
Right. So, and then if you do want to lock in, let's say 2, 3 years down the road, and you're doing I know a lot of variables are shorter term, but let's say you do a long-term variable and the interest rates, the world, whatever happens and the interest rates do go crazy. Is there a penalty for locking in into a fixed rate?
No, so I have two clients that very much did not want to go variable 3 years ago. We talked about it, and they were very worried, and ended up being the best thing. And I couldn't have predicted this, but prime fell off a cliff, and so ended up being a really great thing for them. And the reason that we did it is that they weren't really sure what their long-term plans were, right? So one of them was thinking potentially moving to Vancouver. The other one, it was two brothers buying together, and who knows if the brothers would have met girls and had to go in opposite directions. And so we talked about the variable for the stability of the penalty. And then there was a really great offer a couple of months ago from one of my preferred partners, a prime minus 1.5%. So I called these guys and said, like, listen, this other lender is offering this, but there's another option as well. Right now, a 2-year fixed with your lender is 1.54%. And you're paying 1.45% because the discount was prime minus 1 at the time. And so they locked in for the next 2 years at 1.54, knowing that they're fixed, no penalty, no fuss, no mess, phone into the lender, locked it in. They're happier than could be.
No kidding. At 1.54. Wow. Some great stories there, and those are real. The stories that I told are real too. If you have friends, if you have family, if you're thinking about just getting an updated market value, now is a great time. And I'm happy to provide that information to you at no obligation. Just call me, love to have coffee, and we'll get you an updated home value, and talk to Jaden, because obviously he can work some magic, and he is very, very good at what he does. So with that, we are going to wrap it up for today. Any questions, please leave a comment in the comment section. We'll get to those. And we will see you all next week. Thanks, Jaden.
Thank you, buddy. Have a good one, guys.